Hi everyone out there and welcome and good morning to all the gorgeous women out there. CNBC has great women power, as you saw. Every aspect of the company is run with a lot of women folk. I think we must be ranking among the companies with maybe the highest percentage of women employees. Well, good morning. Well, to Sonia and to Anuj, and it's very important that the men are also wished on International Women's Day, because that's the power. At least in my house, I wouldn't be able to work if the men folk in the house didn't support. Would you agree, Anuj?
For me, every day is a Women's Day. Yeah. So.
Oh, yes, you are one of those lucky guys with 3 women at home.
Exactly. So, I don't think you need a special International Women's Day, but, since we have it, of course, here's wishing every woman all the power. And, of course,
doesn't it? I would guess it
I think it's time now. It's time now to perhaps call it the stronger sex instead of the weaker sex. I mean, let's put it that way, because I can vouch for it. Looking at my house,
maybe in some parts of the world and in some families in every part of the world, it may be the stronger sex or the equal sex.
Yes.
But there is still a lot of work to do in several other families in India and in the world where perhaps people have not yet concentrated on so many disabilities that women suffer.
Yeah.
I mean, like dropout of girls that you were talking about.
Absolutely, yeah. We were talking about it before the show started, right? 25 million girls drop out of school every year once they attain menstruation because of poor hygiene, factors in schools, in rural areas, etc. So there are so many women problems, but I take your point. Every day is Women's Day. For me as well, I mean, I live in a women-dominated household. I work in a women-dominated industry. So, happy Women's Day to all the women out there, and may empowered women empower women further. So
that's beautifully put. For the power behind my working also is my mother-in-law. Yeah. So obviously empowered women are very useful to empower other women. Okay, with that we have to get back to business. And the key point, the theme over the last 24 hours, in fact I would vouch over the last 72 hours, has been a creeping global slowdown that yesterday seemed to have been vouched very well or expressed very strongly by the European Central Bank. The European Central Bank Governor Draghi has dragged down the growth forecast of that union, of the EU, from 1.7 to 1.1 and has extended the liquidity facilities, the TLTRO, by a big measure. So now what we might see is competing dovishness by central banks. You saw the US central bank suddenly becoming dovish after October last year, and now we have competing dovishness and liquidity coming from ECB. Who knows, Japan maybe next, and other central banks also could follow. This of course removes the liquidity threat. For emerging markets, tighter liquidity is a very big problem. Yeah. So that removes the threat. But slowing growth can't be good news for anybody. India was an outlier when it came to the slowdown of the last 3 days in the markets. Global markets, US, Europe, Asia, all of them were lower for the 4th straight day now. Today we may have to succumb to that overwhelming slowdown news, especially because we have been outperformers over the last 3 days. I expect, therefore, red on Indian screens today.
Absolutely. And, as you said, 4th straight day, the Dow is down. Even ECB has slashed global growth forecast. So things not looking that good. Even for our own markets, the numbers, whoever looks at those numbers closely, DIIs have been selling. In 2 days now, DIIs, domestic institutions that is, have sold almost 1,800 odd crores. Anuj, morning, you were telling us yesterday as to how the time to buy in this market has come and gone.
Yeah.
So has the market made a near-term top, or is it too soon to call that?
I think still too soon to call that. The risk is there. Normally, double tops are made with some kind of good news. And the market, gives you a gap up and then fails. But having said that, that risk is there. And this is where, you know, the data's importance comes in. We were making this point yesterday that put call ratio is in that zone and the India VIX has fallen. And these are anecdotally important levels. Last time also the market topped right at these levels, and this was the kind of put call ratio that we had last time as well. Now, normally these are lag indicators, but at extremes, they work as lead indicators. So, let's put it this way, that as of now, my base case is that we perhaps may have made some kind of top. Though, what will be interesting to see today is what does the market react more to? Does the market react more to this fall in global market? Or yesterday, when we were falling, the trigger was crude prices going up to 66.5. That's retreated back to 65 or thereabout. So, does the market latch on to that from the global cues is something we'll find out. If you are short from yesterday's high would be a sacrosanct stop loss. But the FI data is also indicating that the market is extremely overbought in the near term. In fact, yesterday I was just looking at the data. There was quite a bit of put long unwinding, which is not good news because that means hedges are being taken off the market. Look, this is not a roaring bull market. So this needs some kind of cushion of shorts to rally. So what this market now needs to do is perhaps get back to its 20-day moving average around 10,850. What that would do is it would remove the weak longs. It would get the fresh shorts, which is needed and healthy for the next round of rally. And even this mid cap, even though we made this point 2 weeks back that was the the best time to buy mid caps. The run has been just way too fast in the absolute near term. The mid caps still have a lot of value, and you will still see a lot of rally in good stocks. But just in the near term, this 3 to 4 day rally was too strong. And yesterday, for example, it was not surprising that the mid cap index actually underperformed, and advanced decline ended in favor of declines. So to cut a long story short, let's see yesterday's high. That's sacrosanct. If you start to fail there, then perhaps this particular leg of the market that might be getting done with, and we'll take it from there. Although this rally, of course, has been much better than the last time when we went to 11,000. Last time when we went to 11,000, you felt miserable about it because the portfolio felt like
no one was participating in that rally.
Portfolio felt like 8,000. In this rally towards 11,000, your portfolios have done well. Mid caps have rallied, so that way, things are looking quite good over there.
Okay, well, you spoke about the rally in the equity markets. There's been another rally, right, in the currency market. I mean, the big move in the rupee is what we've seen. It's now sub 70. But do you think that rally could sort of run into a wall because of the way global indices have moved?
Yeah, for the moment it will. Yeah. Actually, from the start, this rally in the currency was a little unfounded. It was just position taking during the border news that the week before, and people were just covering those positions. It just happened that they had to cover the positions when there were FII inflows into equities. So the two colluded and made the rupee unusually strong. Otherwise, nobody was able to give any fundamental reason why the rupee had to get that strong. So today is welcome news. You look at the way the dollar index has spiked, largely because of the euro's fall. It's responding to that. But with this kind of a strength in the dollar index, you must see the rupee retreat a goodish bit. So today is definitely red on the rupee. How red we can't say, but it swung too much on the strength side, and this collusion with a strong dollar will certainly tell today. Today you must expect IT to hold out to be the green spot, and profit taking elsewhere.
All right, on that note, let's tell you what our wise experts have to say as we kickstart trade this morning. Mahesh Nandurkar of CLSA is our voice for the day. He says the mid-cap index has moved up by 9% since the bottom seen in October 2018 and has corrected 26% since its peak in Jan 2018. CLSA takes note of the change in investor sentiments and tactically adds a mid-cap Sadbhav Engineering in their portfolio. Despite the recent 44% rally since its low, they believe Sadbhav Engineering's valuations appear attractive. They have reduced their overweight position in IT. Other mid-caps in CLSA's model portfolio are Godrej Properties, Sobha, Crompton Consumer, TTK Prestige, Dr. Lal Path Labs and Astral Poly.
Okay, well, we're missing the usual Friday greed and fear call. I guess we'll get it in a minute. For the moment, let's give you money market views. Bhaskar Panda of HDFC Bank says he does not think 70 will give way consistently so soon given local conditions. He's expecting the USD INR pair to trade in a range of 70.15 to 70.35 for the day. So no 69 for today, you can be very sure.
Okay, on the bond market, Bhaskar Panda says the benchmark yields have rallied slightly. He expects the 10-year benchmark yield to trade within 7.55 to 7.60% for the trading day.
Okay, let's talk about the global markets then. Here's Sonal with the world view.
Hi, good morning. Well, the biggest global cue that we are watching out for is ECB cutting down the growth forecast to 1.1% versus 1.7% that they forecasted earlier. In fact, Mario Draghi said that there is sizable moderation in economic expansion that will extend in this year itself. And also, the central bank started with a new stimulus program, and this is the third stimulus injection from the ECB since 2014. All these comments spooked the global markets. Let's talk about the US markets then. We saw sharp declines across all the major indices. Dow fell around 200 odd points. S&P also saw some losses. That was led by sectors like financials and consumer stocks. A lot of stocks also declined in trade, the likes of Bank of America, Goldman Sachs, Citigroup and Morgan Stanley. Similar story is what we saw in the European indices as well. CAC, DAX and FTSE, all of them saw declines of around 0.5%. The banking index, that fell around 2% and also we saw Euro dipping 0.7% against the dollar. Moving on to the Asian markets, the stocks there have also tumbled amidst the global growth fear. We are seeing losses of around 1% in all the indices. However, there are some signs of recovery. Let's talk about SGX Nifty. That will also come up for you on the screen, and it is indicating lower start to trade today. Back to you.
Right, global growth concerns is the big talking point. Actually, thanks Sonal, that is the big global story this morning, the cut in the growth forecast from the ECB. So let's hear it out from the man himself, Mario Draghi, on the reasoning behind that big cut and the future outlook.
The outlook for real GDP growth has been revised down substantially in 2019 and slightly in 2020. The risks surrounding the euro area growth outlook are still tilted to the downside on account of the persistence of uncertainties related to geopolitical factors, the threat of protectionism, and vulnerabilities in the emerging markets.
Okay, for some more spin on the global slowdown, here's what former Reserve Bank Governor Raghuram Rajan said when he spoke with CNBC US yesterday.
I do think that what has changed at this point is Germany and the German portion of the ECB is supporting this now because Germany is growing relatively slowly. Germany was always the part of the ECB which opposed greater easing. And I think with Germany growing slowly because of trade issues, because of capital goods exports not working, and because of a bunch of one-off things that have happened in Germany, the Germans are much more predisposed towards easing at this point. The other issue that we're back into competitive easing between central banks. The Fed moved first to ease. Now the ECB has moved. What lies ahead? What is Japan going to do? What is the UK going to do? And really, there's not that much more ammunition left, as you saw with the ECB announcement. I think the problem is nothing else is moving. In fact, everything else is moving in the other direction. I mean, we did not need this trade dispute in the way that it's happened. It's weighed tremendously on global growth. Just as the world economy was recovering in sync, it took that recovery out. And so my worry is that once again, it's the central banks to the rescue. They don't have that much ammunition. Other factors have to start coming in. We have to start thinking about structural reforms in the world economy to get sustainable growth.